It is December, so that means it's time to make my monthly buys in the Asymmetric Portfolio. This month, I'm actually making a lot more transactions than I normally do. I'm selling 2 stocks, not selling out completely, but I am reducing my position in 2 companies that have done extremely well in the portfolio and reallocating some of that money to some of the smaller positions that I think have a lot of long-term potential. So if you want all those transactions, subscribe to Asymmetric Investing. I'm sending that email out on Monday morning to all my premium subscribers. But I am going to give you a preview of one of those transactions I'm going to make today. That's buying shares of Duolingo. This is a stock that has been absolutely obliterated in the market, but I think there's a ton of long-term potential, and I think the market just doesn't understand what this company is. But I'm going to dig into that today. I do want to thank this video sponsor, Fiscal AI, and today is actually the last day for Fiscal AI's 30% off deal. They're doing 30% off all their plans. If you go to fiscal.ai/ASYM, I'm going to use Fiscal AI throughout this video, but you can see all of the information that you need, all of financials, investor relations, even SEC filings and insider transactions. So who owns shares of a stock like Duolingo? Well, the CEO and founder owns about 7% of the company, and you can see all of the trades that have been made by those insiders. But this is really the big thing. Their charts are phenomenal, and they have these KPIs. So you can look at subscription revenue and advertising revenue. What is the driver of a company like Duolingo? Well, obviously, it's subscriptions. But it makes it really easy to do this research and find out exactly what drives a company. Before they ever became a sponsor, this is a product that I paid for. So love what they're doing at Fiscal AI, and it keeps getting better. Day after day, they're just making continual improvements. So if this is a product you've been looking at, now is the time to get it 30% off at fiscal.ai/ASYM. So let's dig into Duolingo, and I'm going to start with the move in the stock recently. You can see that since May, this is one of the few stocks that peaked this year in May, shares are down about 70%. So just been absolutely obliterated. And what's the reason for that? Well, if you go to their financials, you can see that their financials are not all that poor. I'm going to pull up trailing 12-month numbers. You can see that there's no real red flags here when you look at revenue. If we layer in operating profit, you can see that you got a ton of leverage in the business. Let's just focus on that operating profit. You can see this is exactly what you want to see. A company going from losing money to now making more and more money as the revenue grows. But the narrative around Duolingo is not quite so positive. And the narrative, it really has to do with the company's rate of growth and the potential for disruption from artificial intelligence. I'm going to start with the AI angle first, because I think this is one of the things that the market really misunderstands about Duolingo. Yes, this is a translation company. This is a company that's primarily teaching languages, and artificial intelligence is going to change the way that we communicate when we travel. I was recently in Europe. English was not the native language of most of the people there, but most of the people that we interacted with did know English. Well, they have to learn English somehow. So the question there becomes, do those people who learn English to be able to communicate with travelers like myself, do they just not learn English in the future because we have an AirPod in our ears that's able to do that translation in the background? I don't think that's the case. I don't think you want to go to a restaurant and order something and have somebody listening through an AirPod and having that translation happen, and then speaking a different language. By the way, they have to communicate with you as well, speaking a different language, and then you have your own AirPod on. This is all way too complicated. We're really overthinking things. People want to learn things. They want to learn languages either because it's a hobby, it's something that they want to do, or it's a function that they need to get a job. And this is the thing that Duolingo has really been focused on. Their CEO talks about this all the time, that the metric that they are most focused on is, can you get a job in the language that you're learning? So sure, artificial intelligence will change all kinds of things about the way we learn. But I think Duolingo is actually leveraging artificial intelligence. This is actually one of the biggest users of OpenAI's API. And it's making it easier to learn a language and build the programs to teach languages or teach other pieces of education. I don't think this is necessarily a disruptor. I think it could be an actual benefit for Duolingo. So that's the narrative piece of it. The other piece is the rate of growth that investors are expecting in the future. If you look at subscription bookings, the growth rate of these bookings has slowed down a little bit. Still growing, but the rate of growth is slowing down. So if you look at third quarter results, 41% increase in revenue year over year. Total bookings were only up 33%. Now we go down to guidance. They're only expecting bookings to be up 21.3% to 23.5%, and revenue to only be up 30 to 32%, basically. So the rate of growth is slowing at Duolingo, but this is intentional. If we go up a little bit further in this shareholder letter, you can see that they talk a lot about taking the long view. The opportunity ahead is teaching billions of people. A couple paragraphs later, in the third quarter, we decided to shift the balance towards longer term incentives. So Duolingo does thousands of these, what they call A/B tests, where you're basically saying, okay, if we're looking for this outcome, we have two different options that we can do. We're going to test them, see which one works to get the outcome that we want. So what they're focusing on right now is growth in the number of users. Now you have two ways you can judge this. This is monthly active users on the top. There are now 135.3 million monthly active users, and daily active users, so 50.5 million daily active users. So what they're saying is they were giving up revenue and profitability today for user growth. Now, the theory is that that's going to lead to more revenue and profit opportunity in the future. So this is a classic trade-off that companies make. Are you going to invest in growing the user base, in building more products, basically spending operating expenses today to grow the business and then say, you know what, I'll get that payoff sometime in the future? Or do you want to maximize your profitability right now? As an asymmetric investor, I would make that trade-off 10 times out of 10, especially if that means you're getting a better price as an investor. Now, I think the really impressive thing here is that they're actually seeing acceleration in the number of daily active users. So you can see that this is working in the way that they intend. But obviously, the market has not liked what it's seen. You can see down 41% year to date, the stock is right now. And since this peak, shares are down about 65%. But that means we're actually getting a pretty compelling valuation. Enterprise value to sales is about 8. The company has about $1 billion of net cash on the balance sheet. So the balance sheet is really good. Price to free cash flow, about 25. If you look at a forward basis, price to free cash flow goes down to about 20. And we're not really seeing a whole lot of weakness in the company's financials. This is revenue in yellow, blue is gross profit, and then orange is operating profit. All of these metrics are moving higher. This is exactly what you want to see. So right now we're getting a company that's growing revenue at 40%. Sure, maybe that drops down to 30%, maybe even to 20% over the next couple of quarters. But long-term, I think this is a company that can grow their revenue at 20 to 30% and just compound that year after year. You're not paying all that high of multiples for the company. So over a long period of time, over 10 years, the companies that are going to beat the market, just absolutely crush the market, are the companies that are going to be able to compound revenue over a long period of time. What I'm going to be watching with Duolingo as I build out this position is, are they able to move into more specialties? They've moved into chess. They've added things like math. The kids' education is really interesting. My kids really love that. But are you able to expand beyond just being known for languages? Are you able to expand into science and history and all kinds of other things that people want to learn? That's, I think, the next big challenge for Duolingo, because that bundle price that they're selling their subscriptions for, the ultimate value is when you're adding more value for that bundle. Maybe people aren't getting enough value if they're just learning languages on Duolingo to keep paying that subscription price year after year. But maybe you start by learning a language and then you move into learning other areas. Maybe it becomes part of your educational routine as a youngster, and then you just keep using it year after year because it's such a great educational tool. We're really early in them building out this platform, and I think that's what's so exciting for Duolingo. The financials say that there's a ton of momentum in the business. The number of daily active users says that there's a ton of momentum in people choosing Duolingo as an application that they'll interact with. And yet, investors are seeing disruption in the business. I'm not seeing that right now. That's why I'm adding to my position in Duolingo. It's a small position right now, but that will hopefully grow if the stock continues to trade at a really good valuation. Look, if shares continue to fall, I'm happy to buy more, especially if we do start to see that the financials are backing up this thesis that this company is not being disrupted right now. So that's what I'm looking at with Duolingo, why it's one of the stocks that I'm going to be buying. But like I said, there's a bunch of transactions that I've been making. That email will go out to premium subscribers on Monday morning. So if you want to know everything I'm doing, subscribe to Asymmetric Investing. And like I said, this is also the last day to get this 30% off deal at Fiscal AI. Go to fiscal.ai/ASYM to get that deal. Platform that I'm a paying subscriber. And obviously you see it here on Asymmetric Investing all the time. So definitely a product that I recommend you check out. Thanks for watching, everybody. We'll see you here next time.